Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, January 25th at the market's close. Before we start, please know that I will be speaking at the Money Show Orlando on Saturday, February 8th, on how to power up your swing trading profits. And I will be speaking from 2 to 2:45 p.m. and I would love to see you there. I'll also be doing a book signing in the exhibit hall, so please come up and say hi to me. I would love to see you at the Money Show Orlando. Now, for more information about that, just go to moneyshow.com and click on the Money Show Orlando. You'll see a little picture there on the right side of the home page. So it's going to be a great place to see a lot of really good speakers, to learn, to discover how to make more money in the market. So I look forward to seeing you there. And now we'll go on to the market. At the moment, it appears that Wall Street is betting on the most popular U.S. technology and internet stocks, betting that they can keep on outshining the broader equities market, but we don't have much room for error this earnings season. Investors were disappointed after Tuesday's less than stellar quarterly report from Netflix, but hopes are still high for the upcoming earnings announcements from Facebook, Apple, Amazon, Google, and Microsoft. So we will stay tuned to see what happens for those earnings announcements. And on that note, let's go on and look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, the SPY took a little nap today after dancing up at new all-time highs during the past week. As you can see, we were making new all-time highs this past week and made another all-time closing high on January 17th at $331.95, or about $33.19 on the S&P 500 itself. Now today the SPY closed at $328.77, just above its 20-day moving average. That's the red line on this screen. You can also see a trend line moving up just below the 20-day moving average and now moving to be run along in alignment with that 20-day moving average. So this line here is getting to be pretty strong. It's getting to be major support here for the SPY. And the 20-day moving average is now coming in at $326.43. So we're just a couple of bucks above the trend line here and the 20-day moving average. Now, you can see that Friday's candle gapped up very slightly, as I said, and then moved down. We had one of the most forceful days we've seen here in quite some time. The bulls and bears were arguing on Friday as the bulls said, hey, we're going to keep it higher, and the bears said, no, you're not. We think this market needs to take a little breather here, so we'll see next week who wins. If we look down at the RSI, the 14-day RSI down here toward the bottom of your chart, we see that now the RSI line, which has been trading above the 70 line for a long time, which means that whatever you're looking at, in this case the SPY, is overbought or stretched really tight, if you want to put it another way. Now we can see that the RSI line has actually fallen back down below the 70 line just a little bit, and it's at about 62 right now. So it's just a little below that line. When the RSI is above the 70 line, it's not an immediate worry. It's sort of a nagging kind of feeling that you get, like, ooh, when's it going to happen? Because usually when price gets overbought, at some point profit taking comes in. It's just the way the markets work. So at any rate, now we do have price resistance up here at 333 or 33.30 on the S&P 500. We have nearby support at 326. We have more nearby support down here at 320 or 3,200 on the S&P 500. So we've got lots of support if we need it. The good thing here is the SPY has continued to make new highs for this month of January. And as we've mentioned before, when the S&P 500 or the SPDR has a positive month in January, it can indicate that the market will have a positive year. So well, I'll go with that. I'll go with that. Of course, nothing is absolute in the stock market, as we all know by now, but at least that is, seasonally speaking, a somewhat positive note. In the coming week, we should experience lots of excitement with many key earnings reports, and the FOMC rate announcement is coming in on Wednesday about 2 o'clock. So let's buckle up, and as I've been doing for several weeks, I will continue to trail my stops under my positions as I want to keep my well-earned profits safe. And now we'll go on to our next chart today. This is a chart we look at a lot in here as well. This is the Invesco QQQ, symbol QQQ. As you know, the QQQ represents the Nasdaq 100. We were just talking about some of those stocks that were in it. Netflix is one of them, of course, and we just mentioned that the earnings are coming out for Facebook, Apple, Amazon, Alphabet, and Microsoft, and so forth. And this Nasdaq 100 ETF here, the QQQ, is led pretty strongly by these stocks. So we can see that today the QQQ closed at $222.70. It gapped open to a new all-time high before it did that, and that it gapped open to $225.88. Then it fell to close here at $222.70. So now price is closing at a pretty decent premium here to the 20-day moving average. That's a good thing. It's kind of interesting to note here, I did look at the semiconductor ETF, the SOXX, and it has almost the same pattern if you look at it. It gapped open, beautiful uptrend, gapped open today, and then the bears took over and said, oh, no, you don't. We're not going any higher today. So it closed. It has the same candle. Now, this could be, it isn't yet. It won't be until it's confirmed by a lower candle if that happens. But it could be an engulfing pattern here. It's actually called a bearish engulfing pattern because Friday's candle engulfed quite a bit of price. It engulfed the last 4 days of price action in the QQQ. Another interesting factor we can see here is that the channel line, the uptrend line is below here, and we can see, of course, and we know that the Q's been moving in a wonderful uptrend here. The 20-day moving average kind of helping here, moving in and out of this uptrend line. We can see the channel line above moving also very nicely in a ever so slightly wedge pattern. The QQQ managed to move up and over that channel line, which is indeed a bullish signal. But on Friday, as I said, it gapped up and then fell down, and the bulls said, oh, no, you don't. So it's going to be really interesting to see what happens the coming week with these big tech stocks. If we look down for another opinion, we can look down at the 14-day RSI, which has been trading above the 70 line here since about the middle of December. That is very, very, very rare. I can tell you that right now. As long as I've been in the market, it is very rare to see the RSI line travel in an overbought position for this long, for at least a month or so, and have price keep going up like that. So it's wonderful. It's fun. And again, the QQQ closed at $222.70 today. But when we see this RSI like this, we see higher volume today, we see the bears may be coming in, we have to remember that FOMO, which means fear of missing out, may be coming in. A lot of traders may be coming in here who say, hey, I missed this whole bull market. I better get in here. before it's too late. Now, I'm not saying it's too late, but what I am saying is that at some point here, profit taking is definitely going to appear from those of us who have been riding this uptrend up for a while now. Again, we have earnings season. Is going to make this ride a little bumpier, I'm afraid, for the next 3 weeks. Again, we have the FOMC meeting and the announcement from that on Wednesday. So please, please, please be wise with your risk management. Remember, cash is a position. And again, I am raising my stops on my remaining positions just to be on the safe side. And now on to our final chart for today, something we haven't looked at in a long time, but it may be a good idea. We'll certainly find out. We're looking at the Global X Silver Miners ETF, symbol SIL. It has 24 holdings. It is an international ETF. A lot of Canadian companies in this. It has 24 holdings. Top components are Polymetal International, Wheaton Precision Metals, Korea Precious Metals, Korea Zinc, Pan American Silver, and First Majestic Silver. Now, you can't see it. Well, yeah, I guess you can see it. It made a relative low here in May last year, and right down about $22. Since then, it's moved up past its 20-day. These were all inverted here. It's 20-day, the green line, the 50-day, moved up into June, pulled back a little bit to the 20-day moving average, then kept making a series of sharp moves up and sharp moves down again, making another relative new high at about 32.50 here in August, falling back down and kind of wandering around the 20 and 50-day moving average, staying above the 200-day moving average through the last quarter here. And into the end of the year, now it is starting up. At the end of the year in December, it started up, pulled back just as dramatically, never a dull moment. But now SIL is moving here in a very nice consolidation pattern. It's sitting right above the 50-day moving average and closed today at $31.78 with the 20-day moving average right overhead. Now, I've been looking at a lot of different charts of a lot of different things here. As you know, a lot of ETFs are overbought. But I do like the way this Silver Miners looks here, Silver Miners. This is not the actual commodity. This is the equity ETF. The RSI here is neutral and positive at 53. The MACD here is down just on top of its zero line, but at least on top of it. So I'm going to keep an eye on the SIL in the coming week. I'm going to consider this as a defensive play if I need to. Again, the SIL is sitting on the 50-day moving average, the green line, with the 20-day just overhead at 31.78. If SIL starts climbing here in the coming week, I may add shares of it to my trading portfolio. I'm going to place my initial stop pretty tight. I'm going to place it as a close below $30.50. So if SIL falls down and closes below 30.50, I will be out. It's going to be a tight stop. However, if SIL continues to move higher, breaks above the 20-day moving average, I will raise my stop up to a close below the 50-day moving average, which is now at the moment coming in at $30.95. And then if SIL continues to rise and come back up, perhaps toward this 33.50 zone where it was before, I will continue to trail my stop up. Again, this is kind of a defensive move, but definitely something to keep an eye on in the coming week. So you may want to do that. And now to the upcoming week's economic reports. But first, please join us this coming Monday for our next session of Toni's Market Club. If you're not sure how you can make money in the market right now, please let us help. During our session, we talk about which side of the market to trade, have a mini trading lesson, and I give you stocks and ETFs that may be ripe for high potential trades. Can't attend the live session? No problem. The recording is available to all of our members just as soon as the session ends. Toni's Market Club is a low-priced, high-value opportunity to learn how to trade more successfully and how to make more money. So please join us. For more information, go to the link on this screen or simply click on the button below. And now for the next week's economic reports, and please be assured many hundreds of earnings announcements will be coming out as well, some of them very important ones with the large cap companies. So with economic reports on Monday, we have new home sales. Tuesday, we have durable orders, the S&P Case-Shiller Home Price Index, and consumer confidence. On Wednesday, we have our usual crude inventories. That'll be interesting. And, of course, the very important FOMC rate decision in the afternoon. Thursday, we have our usual jobless claims, the gross domestic product, and our usual nat gas inventories. And on Friday, we have PCE prices, the Chicago PMI, or Purchasing Managers Index, and the consumer sentiment. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to increase your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.